It's crazy that there's been over $1 billion in liquidations across the crypto market over the past 24 hours. There's some rumors that SpaceX has sold their Bitcoin holdings, and the SEC filings have been pushed to sometime next year in 2024. Today, we're going to look at the markets, see what's going on, and see where the charts are pointing us. Hey guys, my name is Sheldon Evans. Welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of those bell notifications so that you don't miss important information like this. So as I mentioned at the beginning, there's been a lot of liquidations over the past 24 hours, and a lot of that is thanks to the news that potentially SpaceX has sold their crypto holdings or their Bitcoin holdings. And you can see this as a headline on Bloomberg that Bitcoin plunge spurs liquidations at SpaceX token sale ways, which is kind of a misleading headline. And the reason that I say this is a report of Elon Musk's SpaceX selling Bitcoin holdings added to the concerns of the liquidations over the past 24 hours. And it's concerning to me that there is maybe a misunderstanding as to what happened, or maybe Bloomberg's doing this on purpose to push some negative news and push the price down. Who knows what goes on in the media, but I would say that Crypto Slate has hit the headline, the nail on the head, with the headline was saying that SpaceX saw valuation of Bitcoin holdings fall by $373 million over 2 years, which is a much more accurate statement. Essentially, what SpaceX did is they wrote down their holdings saying that they had a loss of $373 million, which is completely reasonable. Doesn't mean that they sold any of their Bitcoin. It just means that their Bitcoin holdings are down in value for good reason, because Bitcoin is down in value since they purchased. So there is nothing to be concerned about here. I think there's a lot of overblown news right now, and pretty much everything gets blown out of proportion to manipulate the price in whichever direction they like, whoever they are at the end of the day. And I think the reason they're doing this is because the market is very thin right now. There's not a lot of liquidity. There's not a lot of retail investors. There's not a lot of people sticking around. And it's easy to push the price in certain directions based on news, even with misconstruing headlines like this simple headline that we see here. But with that being said, we did have a large correction for Bitcoin over the past 24 hours. And if you guys have been following me along on Twitter, which I suggest you do, or at this point, x.com, go ahead and follow that because I have been following this move quite closely over the past month or two, and I've been giving updates basically every month to say exactly where we are in this move that I've kind of anticipated. And I'm not necessarily saying we go a lot lower, but it is hitting key levels that we've highlighted in the past, and I'll show that in a second as well. Let's take a look at what happened with Bitcoin. So you can see I have these 2 points highlighted here, and essentially what I mentioned in the tweet is saying that once we touched the top of these lines, we had a bearish divergence from the RSI and the price point here, meaning we had a higher high on the price, but a lower high on the RSI. And generally when we have that, that's a cue for some sort of divergence, and in this case, a bearish divergence. And from that touch to the point that we're at right now, it has been a significant move. When I did make the tweet, it was around 11% move, and I said, would we see a move down to 24.7K, which would give us the full 22% expected drop? And the reason that I said we had a 22% expected drop is that we've been replicating this movement for quite a while, for some time at least. You can see that we had a higher high here, but a lower high on the RSI, at least on the daily time frame back earlier this year. And when we did have that move, we had a 22% correction to the downside. So I'll show a measured move from here to the top here. We had about a 22.6% move, and that took us directly to the 200-day moving average, which is this line over here, this blue line. And now we had something similar this time around. So we had a higher high here, but a lower high on the RSI on the weekly time frame, and that began the move for our bearish move to the downside. And when I made the tweet, we were around 11% from the high, which is around here, and I said that potentially there's a potential for a move down to the 22% mark. And where did we get? We got to 20.68%, so kind of close. Fortunately, we didn't make a lower low compared to here, although it doesn't necessarily mean we can't go lower. And the reason that I say this is often people will say, well, at least we didn't make a lower low, but that isn't necessarily always the best thing, because we did have this, when we had the major crash back in July of 2021, we made new all-time highs. We had a lower high on the RSI here, high here, low here, and then we made a move down. We didn't make a new lower low, but we had a dead cat bounce, and then we made lower lows. Now, we could potentially see something very similar happen here, where we have a dead cat bounce, maybe back up to the 28.2K region before further continued downside momentum. And there's a few things pointing to this. One of them being, of course, is the 200-day moving average, which I have said for a while has been a sort of bull market support line, or at least a bull trend support line. As you can see back here, we touched it and bounced from it, and we continued the bullish trend upwards. This time we have broken and closed below it. well, not yet. At least we've got a few more days before the week ends. But if we do close below this, it's highly likely that we'll turn it into resistance from the downside or from the bottom, and we could see a push lower. So there isn't necessarily the most bullish news on the short-term horizon, especially with low volume, low liquidity. As I mentioned before, it's very easy for the price to be manipulated, whether that's in the upwards or downwards direction, quite easily. And that takes us back to the early days of Bitcoin, where Bitcoin was low liquidity. Most of the crypto market was low liquidity. And that's why we have such volatile moves in the crypto market, whether it's for altcoins or Bitcoin or Ethereum or whatever coin you're looking at. The less liquidity there is and the less depth the market has, the more volatile those moves are. And that's what draws a lot of people in, because most markets are quite stagnant. And when there's volatility, it's easier to trade than a sideways market, and you get chopped up and lose all of your capital. So at the end of the day, this is anticipated, and we aren't necessarily in a bull environment yet from, let's say, the fundamentals, which of course is the Bitcoin halving. As you guys know, pre-halving year, it's not necessarily the best returns, but it is a great time to accumulate. As you know, I don't believe about accumulating in a bull market or DCAing in a bull market, or just regardless whether we're in a bull or a bear market. I don't think DCAing at any time is a great strategy, because you are better off buying when there's blood on the streets, when it's red, because your risk to reward ratio is just much better in those situations, and you have much higher returns if you buy when the price has been low for a longer period of time, and you DCA in this period rather than DCAing in this period that we have up here. So again, if you haven't yet, go follow me on Twitter. I'll also put a link in the description of this video today. I am starting a newsletter, a private newsletter, so that will be free for the time being, so that you can get access to some of the stuff that I'm looking at, some of the important information. We'll just start collecting some of you subscribers for now and push some updates to you. So if you do want the stuff and you're missing it on Twitter and you prefer email notifications, do go ahead and click the subscribe button or subscribe to the free newsletter in the description down below. Now, let's take a look at what's going on with the SEC and the ETF approvals. As you guys know, there's been a lot of submissions for ETF applications from BlackRock, Vanguard, Fidelity, all of these guys, and it's been the ongoing discussion for quite a while now. We have seen that there's a potential delay, or that the SEC has delayed the deadlines for the ETF approvals to early 2024, and a maximum 240-day window is available to the SEC to delay the applications. Now, this might sound like an arbitrary number of days, it might sound like an arbitrary window, but I believe that there's a potential here for a fantastic catalyst for our next huge bull run. And the reason that I say this is, what else is around this many days away from here? And we could potentially have, let's say, a slew of ETF approvals happening one after one another as the SEC finally gets their foot out of their ass and starts supporting the industry as we hope they would. We have the Bitcoin halving in around 235 days from now. Now, as you guys know, as I said, post-halving, there's a very higher likelihood that we have a bull run, as it has happened in the past. There's good reasons for this. There's fundamental reason for this. We have people not trying to capitulate because they do believe that there's also now sort of fundamental technical backing or sentimental backing to what happens after the halving, because we have had history happen and we've seen the price rise after the halving. So that's one of the aspects, not just the fundamental aspects, that could potentially push the price up after the halving. So I think that if everything aligns and we do potentially get ETF approvals around that time, I think we could see manipulation leading up until that point. And manipulation, I mean by pushing the price to the downside. Of course, you might say that manipulation isn't a thing in the markets and everything's manipulation, or it's only manipulation when it gets pushed down. But a lot of the time it is, because people are either trying to buy in lower with more money. There's large players in the industry now, the BlackRocks and the huge funds that do have more capital than retail investors. They do have more capital than individual companies and institutions. They have a lot of capital at their disposal to do with what they wish, whether that is pushing out news that moves the price, whether that is actually selling and buying to push the price, whether that's playing with the liquidity, whether that's playing with all of these different things. They do have their tools at hand to mess with the industry in a way that suits them best. And again, I don't say that this is the woe is me situation, or this is the woe is us and the end of crypto. But once you understand the game and you understand the rules, you can play them to your advantage. So there's no hope in complaining that, the industry is so bad and it's messy and it's scammy and people are manipulating the price or whatever. don't complain. Just see what you have, use the tools that you have at your disposal, and try and capitalize on it as best you can. As I said, at the end of the day, I'm a huge blockchain nerd. I love crypto for the technology. I love blockchain for the technology. But my speculator mindset is separated. There's two compartments that I keep in my head at any given time. And that's the tech and the speculator, or let's say financial incentive side. And the thing is that financial incentive is, of course, one of the main draws to this market. A lot of people come here hoping to make millions or make more money than they currently have. And that draw is what has created the industry boom. And we can say that because we've seen that many of the markets are down, or a lot of the, let's say, the activity has cooled down across the chains because there's not as much financial incentive any longer. But it will come back. It will return. Humans inherently want to turn their lives around. They want to live better lives. They want to look towards shiny new objects, and that will happen. It just depends on what that catalyst is, what that narrative will be. And if you haven't yet, go check out my previous videos. I do speak often about narrative investing and understanding what the narrative is so that you can figure out when's a good time to buy, when's a good time to sell, and what is a good investment. I hesitate to use that word, but let's say good speculation. Now let's take a look at the market in general. As you guys know, we've had a lot of negative move across the board, but there are some interesting things to look at, again, in terms of manipulation. So you guys notice BNB, it's only down 5% over the past 24 hours and 9% over the past 7 days, but BNB has been pretty strong recently, right? And you guys know that it's somewhat of a centralized token. We did have this liquidation here. And the reason why I want to comment on this is to talk about cascading liquidations. So we had $1 billion worth of liquidations over the past 24 hours, right? Yes. Now, what does that mean? Why is that scary? And why is that a thing you should pay attention to? Well, when a coin is liquidated, it means you are forced selling, right? So you have a leveraged position or an outsized position that you've taken a loan against, something like that. And the price of the token or your collateral drops below your liquidation price and you are forced to sell. You don't actually have to do it. Somebody will do it for you. Your exchange will do it. Your broker will do it. Whatever you're trading on will do it for you. And that adds to the downside pressure because there are people bidding on those liquidations. There are people looking to buy those liquidations. And if the price drops below a certain point and the reward looks much better, people will buy up those liquidations. So your tokens get forced out of your hands and into somebody else's hands. And that causes even further downside pressure. So it's an interesting thing to play these liquidations because when a cascade does begin to happen, it's easy for you to long or short those moves and try and make a huge gain from that. That's why I say you can make money whether the market's going up or down, which is another reason why I now link Bybit in my description, because you can really truly make money whether the market goes up or down. You just need to understand the dynamics at play here in the back end and how liquidations work and when are the best risk to reward opportunities. I don't think you should be leverage trading at any given moment in the market all the time. But when there are good opportunities like this, and we do see liquidations about to happen, as you guys know, with the Luna collapse back in the day, there was on-chain evidence that collateral was dropping below what is safe, and there was a great opportunity to short. And if you leverage that short, you could have made insane gains at that point, as many of our guys did. So why am I mentioning BNB specifically? Well, because this leads again into what's happening with sort of liquidations, right? We had now some liquidations with BNB, but it was sustaining itself for a while without liquidating. And the reason this happened is it looks like the Binance liquidator for the BNB on Venus tried to liquidate it, but failed twice and then gave up. And this is from Ethereal Tog on Twitter. And eventually they did manage to liquidate it, but it just shows you that this might be not necessarily a bug in the smart contract, but a feature. As we know, it's a centralized entity. Binance is a centralized entity. They can maybe screw things up. Maybe they can do things on purpose. Maybe they can push the price around however they like. But the liquidator, the person bidding on the liquidation or buying the liquidation, was whitelisted to Binance, and the liquidation failed. Why did it fail? Well, who knows? Maybe it didn't want to cause a liquidation cascade. Maybe there were some actors behind the scenes moving things around, playing with their Lego blocks to make sure that we don't have a massive liquidation cascade. As you guys know, BNB is a very important token in the Binance ecosystem, as much as they like to distance themselves from it for legal reasons. it is a very important aspect to the ecosystem. So they did eventually manage to liquidate it. As you can see here, Buck has said that they were slowly liquidating and they finally made it, but it wasn't instant. And that's what causes these liquidation cascades, is when we have an instant collapse or instant cascade of liquidations that pushes immediate sell pressure on the price. But if you can delay that slightly, you can push that or drag that sell pressure out slightly into the future, you might not have those liquidation cascades. So potentially there's some fishy stuff going on here, potentially not. Obviously, I don't know what's going on behind the scenes. This is just some speculation that I'm saying that could potentially be a very interesting thing to look at, which is why I believe and stand for blockchain and full decentralization, because you sort of take out these actors. That's the whole goal of blockchain, right? It's to remove the need for trust, not necessarily to remove trust. We trust computers, we trust tech, we trust code, but we don't trust humans, whether you're male, female, whoever you are. Some people lie, all people lie, and that's what tech does and what tech saves us for, at least. So there has been quite interesting stuff happening over the past 24 hours regarding that specifically. But let's end this video off with some positive news and some potential bullish news in the future. And one of those is futures specifically. So the SEC is set to greenlight Ether futures ETFs as a win for the crypto industry. So SEC is unlikely to block the products that could list by October. So again, this is not an Ethereum spot ETF, but it is good news, meaning that the SEC is lenient and that their arms are bending slightly in terms of trying to support the industry in certain ways. Not ideally, not exactly how we would like it. They're not protecting investors completely, but it is an interesting shift of events, and seeing that there's maybe some support for tokens that they deem not securities, which at the end of the day is also a very sticky subject based on what the SEC thinks is and is not a security. But this is the beginning of an Ethereum future ETF. We could have other altcoin futures ETFs, potentially then even altcoin spot ETFs or Ethereum spot ETFs in the future. And we will go through the exact same thing that we're going through right now with the ETFs around Bitcoin. Once these get approved, I do believe it'll be a stepping stone for other ETFs to start getting approved, or at least applications being filed. And it could coincide very likely with the timeline, as I mentioned before, that 240-day mark before the Bitcoin halving. Sometime in 2024, we begin our next big bull run. Maybe that's the super cycle. Maybe it's not. Maybe we do have these repeated cycles until we have the industry big enough. Remember, the crypto industry as a whole is still very, very small. $1 trillion market cap, still smaller than most individual companies like Apple and Tesla and so on. So, well, similar size. So it's very, very small in terms of an industry as a whole, meaning that the volatility could still be there, the liquidity could still be there for another boom and bust cycle before we have slow and steady multi-decade moves to the upside, like we had with, of course, the dot-com bubble and the dot-com boom, or at least the tech boom of the past decade for the S&P and so on. So it's likely that because liquidity is low, because the industry is still very small, we have one last bull run. And it will be an opportunity of a lifetime. So if you are here, if you are sticking around, you're watching this video right now, I commend you. I commend you for sticking around. But also, I don't, because it's in your best interest to do that. So I don't necessarily have to commend you for doing something that's noble. I commend you for doing something that's in your best interest, in your own financial best interest. So stick around. These opportunities will present themselves as one of the best opportunities you ever come across in your life. And hopefully I can be your guide for some of that as we move into the future. As I said, don't forget to subscribe to the newsletter in the description down below. If you like the video or any of the content in this video, please give the video a thumbs up and hit the subscribe button so that you don't miss this stuff in the future. As always, I shall see you in the next video. Comment down below, unplugged. Bye-bye.